Ever wondered if you could start investing in the stock market with just $100? Well, you're not alone. The world of investing can seem intimidating at first glance, but it doesn't have to be. Even with a modest sum like $100, you can dip your toes into this exciting realm. The key is to understand the basics, set up your account, choose your investments wisely, and make your first trade. Stay with us until the end, and we will tell you step by step how to start investing in the stock market, and most importantly how to do it correctly and efficiently. And we will also be grateful if you like this video, subscribe to our channel and turn on the notification bell. This will allow us to create more interesting content about achieving financial freedom and personal development. Before you jump in, it's essential to understand what investing in the stock market means. Essentially, when you invest in the stock market, you're buying a piece of a company, also known as shares or stocks. Each share represents a tiny ownership stake in that company. Now, why would you want to own a piece of a company? Well, as a shareholder, you stand to benefit when the company does well and its value increases. This increase in value is reflected in the price of the company's shares. But it's not just about buying low and selling high. Many companies also pay out dividends, which are a portion of the company's earnings distributed to shareholders. So, owning stocks can provide you with two potential sources of income: dividends and capital gains. However, it's important to remember that investing in the stock market is not a guaranteed way to make money. Stocks are considered a risky asset because their prices can go up, but they can also go down, sometimes significantly. That's why it's crucial to do your research, known as due diligence, before investing. Due diligence involves understanding a company's business model, its competitive positioning, and its financial health, among other things. You'll also want to keep an eye on broader market trends and economic indicators. The more you know, the better equipped you'll be to make informed investment decisions. But don't worry, you don't need to be a Wall Street guru to get started. There are plenty of resources available to help you learn the ropes, from online tutorials and investment books to financial news websites and podcasts. Investing in the stock market can be a rewarding way to grow your wealth over the long term, but like all good things, it requires time, patience, and a bit of homework. Remember, the goal is not to get rich quick, but to build wealth sustainably over time. Now that you've got the basics down, it's time to move on to how you can start investing. Your first step is to set up a brokerage account. Think of this account as your gateway into the world of investing. It's where you'll hold and manage your investments, and it's the platform you'll use to buy and sell stocks. Choosing the right broker is key. You'll want to consider factors such as pricing, platform usability, customer service, and the available investment options. Some brokers cater to beginners with user-friendly platforms and extensive educational resources. Others might offer more advanced tools for seasoned investors. And remember, you're not signing a lifelong contract. You can always switch brokers if your needs change. Once you've chosen a broker, it's time to fill out the necessary forms to open your account. This usually involves providing some personal information like your name, address, and social security number. You'll also need to answer some questions about your investment goals and risk tolerance. These questions help the broker understand your financial situation and investing objectives, enabling them to provide you with suitable investment options. After your account is opened, it's time to deposit your initial investment. In this case, we're starting with $100. While some brokers require higher minimum deposits, many allow you to start investing with as little as $100 or even less. To deposit your funds, you'll likely need to link a bank account to your brokerage account. This can typically be done online, and once the link is established, transferring funds is usually as simple as entering the amount you want to deposit and clicking a button. It's important to note that it may take a few days for your funds to clear. So, don't be alarmed if your $100 doesn't show up in your account immediately. And there you have it. You've chosen a broker, opened an account, and deposited your initial investment. You're now officially an investor with a brokerage account ready for action. With your account set up, you're ready to start investing. Now comes the exciting part: choosing your investments. Imagine standing in the world's largest supermarket, with aisles upon aisles of products. Only, in this scenario, each product is a company's stock, and the aisles are different sectors of the economy. From technology to healthcare, from consumer goods to utilities, you have an array of options to choose from. The challenge is deciding where to put your hard-earned money. The first tip is diversification. This is the practice of spreading your investments across various sectors and companies to mitigate risk. Think of it as not putting all your eggs in one basket. If one sector or company doesn't perform well, your entire portfolio isn't affected. To diversify effectively, consider investing in a mix of growth stocks, which are from companies expected to grow at an above-average rate, and value stocks, which are shares from companies that are considered undervalued in the market. You could also look at different sectors like technology, healthcare, or consumer goods to spread your risk further. Secondly, it's essential to assess a company's financial health before investing. Look at its balance sheet, income statement, and cash flow statement. These documents can provide insights into the company's profitability, its debts, and how effectively it's using its cash. Also consider the company's earnings per share, EPS, which indicates how much profit a company makes for each share of its stock. A higher EPS can often indicate a more profitable company, which could lead to higher stock prices in the future. Lastly, keep an eye on the price-to-earnings ratio, or PE ratio. This number can help you understand if a company's stock is overvalued or undervalued compared to its earnings. A lower PE ratio could indicate a potentially undervalued stock, while a higher PE ratio might suggest an overvalued stock. Investing is a strategic game, and while it might seem daunting at first, with the right approach and enough research, it can become an exciting journey of financial growth and learning. Remember, the goal is to buy low and sell high. You've chosen your investments. Now it's time to make your first trade. Let's break this down into simple steps. First, navigate to your online brokerage account. Locate the search bar and type in the ticker symbol of the stock you'd like to buy. The ticker symbol is a unique series of letters representing a particular company on the stock exchange. Once you've found your desired stock, you'll see the current price per share. This is the amount you'll pay for each share of the stock. You can also see other useful information like the stock's historical performance and any news related to the company. But for now, let's focus on making your first purchase. Click on the Trade or Buy button, usually located near the stock's current price. This will take you to the order page. Here, you'll input how many shares you want to buy. Remember, you don't always have to buy whole shares. Many platforms allow you to buy fractional shares, which means you can invest with the exact amount of money you have available. Next, you'll choose the type of order. A market order buys the stock at the best available price. A limit order, on the other hand, only buys the stock if it reaches a certain price that you set. For beginners, a market order is usually the simplest way to go. After you've entered all the necessary information, review your order carefully. Make sure everything looks correct, then hit the Submit or Confirm button. And just like that, you've placed your first order. Now it's time to monitor your investment. Keep an eye on your portfolio to see how your stocks are doing. Remember, investing is a long-term game, so don't panic if you see some ups and downs. Remember, the stock market is a complex beast, and it takes time to understand its movements fully. So, continue learning, stay patient, and don't be afraid to ask for help if you need it. The key takeaway is that even a small amount can grow over time with strategic investing that includes careful company research, diversification, and a long-term perspective when making investment decisions.